Hey everyone, welcome to our forum. I'm opening up the webinar just a little bit early just to do a quick sound check. If you could let me know if you can hear me okay and you can see the screen once you get through the pop-up ad. At least that's what I got anyway. But please let me know if you can hear me and where you're tuning in from. We've got Senrab from Cape Town, South Africa. That's awesome. Tommy Doyle from New York. And Gary from Palo Alto, awesome. Jack says, can hear you fine. And Lawrence, hello, VectorVest Nation from Wisconsin. Great to have you with us. Mary says, sound is fine. So that's pretty terrific, and I hope everybody is doing well. There's Eugene from London. Great to have you with us. And Israel Eaton, good to have you as well. I always love the international flavor of these forum presentations, and it's so great to have you all with us. So glad you can hear me okay. Lots to look forward to today. Very interesting markets, so we'll certainly be talking about that, and look forward to our keynote presentation as well. So we've got a couple of minutes just before the 11 o'clock Eastern start time. Maybe just let me know on a scale of 1 to 5, how well have you protected yourself in the markets, and have you started to buy back in? Maybe just kind of let me know on a scale of 1 to 5. 5 is you protected well, and now you either have your shopping list ready or you've already started to trickle back in. Would be really interesting to know from everybody. Carol, welcome from Lethbridge, my hometown here. 1 to 5, anybody? Anybody want to fess up? Jim says 3, so that's pretty good. Paul says 4, so protected and maybe starting to step in, or at least having a shopping list ready. Seeing lots of 4s and 5s now. Dawn says buying back in. Doug from Lexington in Kentucky, great to have you. Ken says 4. Raphael, not sure what to do, Raphael says. So hopefully by the end of today, Raphael, you'll have some clarity on that. And Phil, always great to hear from you out of Markham. He's well protected, a former user group leader out there in Markham, Ontario. And Ninja says bought some back in. Luke 5, the best I can. Yeah, it's been a volatile market, right? And so there's certainly been uncertainty. You get some good news, like the jobs reports last week, and then it's always mixed with, sort of bearish sentiment toward government leaders and COVID and other geopolitical issues that we certainly don't want to talk about. Erwin from Regina in Saskatchewan with his group out there does a great job, and he is saying cautious about getting back in. And Sandy says nibbling in, and Marguerite is a 5. Dawn, great to see you from Salt Spring Island in BC. Awesome. Well, listen, it's just 1 minute. Well, actually, it's right on the dot here as far as my clock, and so that's pretty good. Oh, oh, Michael, Michael from Ottawa, maybe getting a little tired of all the traffic there in Ottawa. Oh gosh, no, it's not a laughing matter, I can tell you that. Listen, let's get started. Thanks, everyone. We've got a lot of ground to cover. It's a terrific presentation again. With our keynote, and we just want to give everybody lots of time. So let's get going. Hopefully my slides will advance and it'll work. I see there, at least on my laptop, there's a little bit of a lag here, so I'll kind of go slow a little bit, but just risk disclaimer, of course, there's risk in investing. I think we know that, and everything you'll see and hear today is provided for educational purposes only, should never be considered as investment advice. We're not licensed to provide that information. And so the information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. Our goal is to teach you more about the VectorVest system and the tools that are available. In our agenda, we are going to have a quick look at the markets around the VectorVest world. I'll be talking about that and focus a little bit on what's happening in Canada. And our friend Dr. David Paul will come in and talk about the US and the UK. And then we'll have our special presentation, Taming TQQQ. So a moving average pair swing trading strategy, and just another way to trade the TQQ. We've had excellent presentations from our friend Bob Turnbull, and a lot of folks are following the BS strategy. And for the TQQ side, this will be another choice. And then just to note, the recording will be available on YouTube. That's where we archive these recordings, so they're available on the YouTube right at the same VectorVest YouTube location. And then the slides now are coming out directly from VectorVest, so we kind of got to wait till Monday morning when they're back in the office, but they can send them out as one push of the button and it goes out to thousands of people, where it used to take me forever. So you will get the slides, but they will be typically Monday afternoon. All right, well, let's go ahead and have a look at the markets. So if my screen advances here, there we go. So we all have access now to all of our VectorVest countries, but I like to put them, for this presentation, all the color guards right from the home pages of every country, so that we can kind of see that the markets tend to move almost in sync globally. Obviously not always one-to-one, but they tend to move in sync. So when we see what's happening over here in Australia, it gives us an idea, and Europe and the UK. And then of course we have the US, where many of our subscribers invest regardless of whether they live in the US or not. Certainly in Canada, that's the case. We invest there as well. And here is Canada. So the color guard is mildly bullish. VectorVest still advocates caution when buying stocks at this time. And year to date, we're down about 3.74%. But if you remove the petroleum stocks, our petroleum industry group and sector, as I'm sure you know, has just been roaring over the last year. Had a little bit of a pullback or lull, but now it's flying high again. So if you remove those stocks, then then we would be closer to 6% down, just the same as some of the other countries. But we do have a green light in the price column, which is always a good thing. Buy-sell ratio has improved from 0.12 up to 0.30. So the breadth of the market, the health of the market is improving. It's still weak according to the buy-sell ratio. Still far more sell-rated stocks than buy-rated, but it's getting better. And the MTI has moved up to 0.73. We've had our primary wave up now for 5 consecutive days. And but the long-term, the underlying trend here is down. You can see that in the second column of the trend column. Now the US has had a more difficult time. Currently though, the color guard is mildly bullish, and we have a green light in the price column. The buy-sell ratio has moved up from 0.13 to 0.27. So we had a lot of red, and it's a transition into some green, and our primary wave is up as well. And you can see down 8% year to date. Now notice over here at the bottom right, these are the full 1 year returns, not including dividend payments, for all of our different countries. So Europe was the leader at 24% last year, which was pretty spectacular. Canada 17, US 15, UK 13, and Australia 12. So here is Australia, and the color guard is neutral. There's no green lights yet. So it does seem that there's still a lot of volatility, and the price is improving, and the buy-sell ratio up to 0.24. And by the way, for the newcomers, the buy-sell ratio is just the number of buy-rated stocks in the VectorVest program divided by the sell-rated stocks, and the historical benchmarks are 0.20. When we're near 0.20 or below, We know that we're searching for a bottom, and you can see we did get a little bit of a boost after hitting the bottom in Australia. Primary wave is up, long-term trend down. UK, David will talk more about the UK and the US as well, but year to date down 6%. A couple of green lights, and then just the yellow transition. You can't go in the price column. You can't go from a red light down here to a green light up at the top, even if price is moving higher. And so the buy sell ratio 0.53, still pretty good. And a primary wave is up, long-term trend is down. And then on Europe, down 6%, so not off to the good start that they had last year when they wound up with a 24% gain. But starting to see some green in the price column as well, so that's always good, and the primary wave is up. So overall, we can see we've transitioned a little bit from a lot of red to more yellow and sprinkling of green. And so for the more aggressive sort of bottom fishing type of trading, buying value where stocks have been beaten down, it's okay, but use caution. And in Canada, I just wanted to show petroleum has just been the top ranked sector with a lot of top ranked industries as well for quite some time, and there it is. But just notice insurance, REITs, a market which is closed-end funds, and other ETFs, retail, real estate management, the telecoms, and the banks. These are kind of defensive type of plays. And so when you're looking to add, if you are, this is a good place to start. And then in the strategy section, VectorVest says bargain hunters drove gains this week. So we had gains off of that bottom. And the market timing indicators, the RT, buy sell ratio, and MTI all managed to gain. And so we just need the price of the VectorVest composite to move higher for one more 5-day trading period to get a preliminary signal of a sustained uptrend. That would be the confirmed up call. So we are in a primary wave up with a green light, and we're right up against this resistance area and actually fell back off of the resistance. Bit of a harami green candle here, so we could break through that. And we've got support down here. Just my comment is risk management should be your top priority until we get through this next resistance level. But it is nice to see the indicators below starting to move up. Notice bottom fishing was the order of the day on Friday, and Blyer's bottom feeders. But just notice it's a lot of Bitcoin, a lot of marijuana. So pretty focused results in the bottom fishing, and that was true with all of the other Derby searches as well. Yeah, I'll have to change my year here. Somebody pointed out, Gil, thank you. Yeah, it is actually 2022 up at the top here. That's what happens when you copy and paste. Sorry about that. Hopefully everybody's getting good sound. Sorry, Terry, if you're not getting good sound, you may have to log out and log back in. Michael V having the same problem currently in Mexico. Not much more I can do about it. I see the mic bar is looking really good here, so I'll just have to keep going. Just quickly on the emotional market cycle, we've kind of come to the top of the cycle, all the way down through anxiety, panic, and despair, only if you didn't take some defensive steps here. And I know from our Q&A the last couple of weeks that people were really taking defensive action, tightening their stops and protecting and not buying until we got down to this point where we're now sort of in this blast off phase. Doesn't always just go straight up and reach this upper level, but at least we're off to a good start with the blast off phase. And again, you can see the buy sell ratio here in Canada buy-sell ratio and the MTI over here on the right. So this is where we're at, right about there. And you can see the commentary down below. Okay, so John's given everyone some guidance there on how you might adjust your sound. I'm pretty close to the mic, so I don't know if I can speak any louder. Get rid of that headset just for now, and then we'll see if that helps. I don't know. And Richard, I can't tell you why there's no sound. Everybody's getting it. Drew says, love this chart. It's very, very helpful to know where we're at with the historical benchmarks for sure. And I just pulled up my essay, and everybody has access to all the essays in the VectorVest program every Friday. The managing directors in the other countries and Angela Akers in the US write an essay that's filled with terrific guidance on different topics. On this one, I just chose to remind people about the benchmark, buy-sell ratio levels, and the MTI, focusing on the buy-sell level. So you can have a look at that, and just reminding people about Dr. Toledo's Stock Strategies and Common Sense. You can get your copy from the Welcome tab, and it's updated this year with the 3rd edition. So, and this is one of the chapters, chapter 16 on bottom fishing, that is worth another read. And a little bit more on market timing, and this one was more about the confirmed calls. So what are the rules in Canada for the confirmed calls? And there they are. Just wanted to remind folks that if for a businessman's perspective and investors' 2 cents on the market, you can go to our blog, and typically every Sunday, Mike Simonato posts a really, really insightful blog. Of course, he lives in the Blue Mountains in Ontario, has a business there, and a lot of insights and great investing advice. So just a reminder about that, vectorvest.ca/blog is the place to go. And I'm just going to look and see if there's any questions. I see questions about sound. I just don't know what I can do about that. I really apologize for that for those that aren't getting the sound, but lots of folks are. Yeah, and Brian says I should have sold everything 2 months ago, and I didn't, and he's not happy about that. But yeah, I mean, there's always the idea of woulda, shoulda, coulda, But let's just see. Did I save that graph? Let me know I didn't. But if I go to the market timing graph here in Canada, we really did have quite a bit of warning. There was just really no upward sustained trend. We did have a good trend there. There's the confirmed calls. So that was a good uptrend. We had a head and shoulders up at the top here, which is bearish. And certainly we had the follow through below the neckline. And then we hit our lows with, the buy-sell ratio, giving us an opportunity to buy some bargain priced stocks. And they've moved up, but now we're right at resistance. So that kind of gives you that look. And the DEW, pretty good signal, Goldilocks signal. So that was the DEW on October 18th, and it lasted till there. And then the market just kind of went sideways to down, and then the DEW on January 5th. So if you follow the signals, I think you're in good shape, folks. I think VectorVest did a really good job of protecting all of us and guiding us into defensive postures. The hot stocks panel on the US side was picking shorting ETFs for all this period as well. All right. Raphael says log out and log back in. It worked for me. So folks, that's all I can say. Raphael says this could be a bull trap. So just be cautious. I think that's the word of the day. Okay. All right. Well, listen, I'm going to pull this off, and I'm going to go right to Dr. David Paul to hear more about the US and UK markets. I'll just kind of wait for the screen to catch up there. And David, if you're ready, I'll make you the presenter here. Hopefully the sound will be good for you. And you'll have to accept that responsibility. And I'll pull you back there. All right, got my headset back on. And I think you're all set, David.
Yeah, good afternoon, Stan. Can you see that blue screen of mine?
Yes, I can see your screen and your sound is excellent. So we should be good to go.
Well, good afternoon, everyone. Well, it's afternoon here. Still morning, I suppose, for many of you. 20 past 4 here on a pleasant afternoon in Notting Hill in West London. There's a huge market here in Notting Hill in West London, and I note this morning that it's the busiest since the plague hit us 2 years ago. So it was really buzzing this morning. So hopefully this darn thing is behind us. So before we start, folks, I have to put up the VectorVest UK specific disclaimer. It says that although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a detailed fact find to establish your essentially stomach for risk. I'm allowed to talk about shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. And it's been a huge week of data, and I'm not going to spend long at this because I'm quite sure most of you have been through it for yourselves. But in the UK, rates raised to 0.5%. GDP forecast by the Bank of England forecast down from 5% to 3.75% due to the Omicron business that I hope is nearly over. Unfortunately, the Bank of England say that inflation is expected to peak at 7.25% sometime in the middle of this year. That's their best shot at it. That's one hell of a number, and that's the highest it's been for 30 years, and that's got a great deal of political fallout. Jobless has fallen, but they expect that jobless number to rise as higher energy prices hit demand here and worldwide. My friend, who's a macro strategist at a large London-listed bank, and I trust his advice, have done for 20 years. He reckons that rate increases will continue, and he tells me the bond market has priced these in already, and the city of London, that is betting on 2 more rises by May. So, folks, there are bond traders betting on a 1.5% UK interest rate by the end of the year. I think that's excessive myself, but there's absolutely no doubt now that central banks have been terribly behind the curve in this. The ECB still hasn't moved, and they're doing their best to catch up. Without a doubt, they'll catch up, and they'll be 2 quarters behind the action. So they always have been. In the US, well, the jobs number, in fact, beat expectations by quite a way yesterday. But on Wednesday, the ADP report diverged from the official non-farm payroll report by the most in a year, and that's caused confusion. So if you are confused, folks, just be happy to know that some of the smartest minds in the world are also confused. You can take glory by association. Unfortunately, and I tried to explain this to somebody at dinner last night, that a good number out of the economy, perversely enough, is bad for the stock market, and they just couldn't get that into their head. Certainly, the really good non-farm payroll report yesterday intensifies speculation that the Fed will hike by 0.25 point, 0.5 point in March. Yesterday, the unemployment numbers were unchanged at 4%. Markets are confused, and there's still a lot of people out there who reckon the Fed will blink. And if you've looked at the market action over the last 2 days, and I've got a chart of it later on, it's been up and down and in and out. Services and manufacturing PMI were ahead of expectation. That was a really good number. And next week should be much, much quieter. Not a great deal of big government news or government reports, and not nearly as many Amazon's and Facebook's reporting. So papers full of the Facebook fallout, and that fall the other day was quite something. So if we go to the front page of VectorVest, and we can see that we've got an up-down situation. If I can read my own writing, the buy-sell ratio is pushed up to 0.27. The MTI has pushed up to, I think, is that 0.6? And we still have a confirmed down. As I'll show you in a second, the DEW is down. I've taken one position based on the primary wave and that green light, and it was very tempting because it really summarized everything that I spoke about in the last 2-day live stream about price and volume. So I just couldn't resist it. There's 934 companies on a buy and a whopping 3,400 on a sell. The buy-sell ratio and the MTI both in that mega oversold territory. So, I did blow it up. So I knew I couldn't read my own writing. So there we are, buy-sell ratio 0.27, MTI 0.6 off their lows. There's no doubt about that. They're going the right way, but still in that mega oversold situation. And you saw Stan's beautiful chart earlier, the market cycle. So I put up a weekly chart of the VectorVest market timing chart over the last, I suppose, 2 years now, and there's the COVID sell-off. And as you can see, there is a level here where it's been down there for a while. Those poor unfortunate UK people will know that I have a great faith in an 8-week stochastic. And I was first taught that by George Lane. George used to line up the stochastics on an hourly chart, daily chart, and a weekly chart, 8, 8, 8. And when they all said bye together, he got really excited, that old George. So as you can see, my 8-week stochastic is right down in this oversold area. And the last time it was down there was way back in March 2020, right at the bottom of this cycle. I think, ladies and gentlemen, that we're very, very close to a weekly low here. Now, is this going to be a push up to heaven, or are we going to push up for 3 to 5 weeks and then go back down again? That is the question we need to answer ourselves. I don't think that I'm certainly going to buy in with a little bit more confirmation here, but I think we're within a week of a weekly low being established in the American markets and hopefully in the UK market as well. That's the more conventional MTI, and as Stan said, there's absolutely no doubt that the signals that we've got from the confirmed calls in the US, I think that I've been with VectorVest now, 11 years, and I think that's probably one of the best signals that I've seen during the course of that period, because as you can see, this darn thing could have easily sucked us in here, and it sucked me in on the DEW in one position there. But since the heel end of November, this has been saying that this market is stuffed and you should stay well away from it. The young man who mentioned earlier that he should have sold months ago. So if you get nothing out of this presentation this afternoon, just write down on a piece of paper, when it's time to sell, you won't want to. Simple as that. I've been at this now. Next year it'll be 40 years, and I can feel that on every trade. When that share is soaring up and I should be taking profits off the table, When it's time to sell, you won't want to. And of course, the opposite of that is when it's time to buy, you won't want to. So just think of those. We've been hardwired by the creator not to be much bloody good at this at times. So this has got a bit of work to do in America because, as you know, the market, as Stan said earlier, has to move up by 2 5-day periods in a row. And the old buy-sell ratio must, in fact, push up above 1. And it's still got a bit of work to do, as you can see. There is divergence here, although I don't think the thing could go much lower, to tell you the truth, but there is a divergence here. Sooner or later, this is going to soar up, as I say. Is this a move up to heaven, or are we going to get up to here? In other words, is this a rally that's going to take 3 to 5 weeks before we go back down again? And I think that the Fed will have to answer that question to make a decision there. So that's the DEW. That's where I got caught in one position just there, big deal. And I had to run for cover rapidly. And you survive by running for cover and not having too strong opinions in this particular business. It's something that, being a good trader, makes you a very boring companion at a dinner party because everybody wants an opinion. And sometimes I say to people, I don't know. I haven't studied that in the slightest, and they think I'm a complete loser because I haven't got an opinion. But I think in terms of the DEW, this can move very fast. So 3 or 4 good days here, and this can leg it up through that 0 line. Certainly, if we could close above that high, that would be very powerful confirmation that this is over. So I have taken a view, and of course I went against my rules last week, but I've taken a view that I'm going to wait until the DEW gives me a buy signal before I buy in. I am very conscious that it could be a 3 to 5 week move after the weekly low is in. With any luck, it will keep going, and it's going to take some accommodating sentences for the Fed to make that happen. And as Stan points out, they all follow each other. So, and I get this from some of the UK people who say, I spend too much time looking at the American markets. What has the American market got to do with somebody selling shoes in London? And pretty much everything. So, because if you look at our JD Sports, it's followed this trajectory down. So that's what I'm looking for. And I just put this up. I dug this off the internet, folks. And last week, this is very positive news. The week before last, as the market, in fact, got right down, this is the Dow 30, okay, the top 30 stocks, as it got down to this very important support level. That was the biggest volume week in years, just to create that weekly hammer candle pattern. And as you can see, if we look back here over the last couple of years, and volume's difficult because, as you know, frequently trades are booked the week after, but it's the best we've got. As you can see, this is the volume associated with the Pfizer announcement. Remember that Monday afternoon when Pfizer made that announcement of the vaccine? And that was huge volume, and that in fact beat it. So that's quite, and if you blow this up, this candle up, you can see that the huge volume done in that week, and there was, I think, 5 hammers or 5 candles with very long tails in a row. So that was really positive. That's what we talked about at our Q&A last Monday afternoon. In fact, this is the S&P 500. It's a market that I actively trade, and I had a very good week in it last week. I was long here, and I told everybody at our Q&A that I was looking for a long just after our Q&A last Monday afternoon, and that's based on an intraday chart. Okay, that's me trying to make beer money. This doesn't bode that well. This is my 8-day stochastic, and as you can see, it was predicting this sell-off. So this went up to here. Now, I know you're not Elliotticians, I'm not that, I haven't got that much faith in it anymore myself after studying the damn thing for 20 years. But there's an awful lot of people who have. And if this, is this 1, 2, 3, and we're going down to make a new low 4? Or is this A, B, and C, and the whole darn thing is over? Well, what added greatly to the positive case last week was that this thing managed to close and interfere with wave 1. And one of the rules that old Elliott has is that wave 4 should not touch or move within wave 1. And that will have added to the bull's resolution. And let's see what happens on Monday. It held these lows quite well. If this breaks up here, ladies and gentlemen, if you see this moving up here, based on that great volume, based on this impinging on this, then this would be 1, 2, 3, and 4, and that would be 5 if it goes up there. If it does go up there, then the probabilities, and I wish I could have a definite opinion, if the probabilities would then favor that this darn thing is over. One, that would be an impulse wave. Unfortunately, after that, we would come back before going again. If the old Elliott wave does anything, it teaches you that markets do not move in straight lines, they move in waves. And a knowledge of that can stop you from being taken out in the noise. So that's what I'm looking for next week. I still think that this wave 4 touching into wave 1 is marginal. Nevertheless, it closed up there. And I think that was important. So if this breaks this level on the S&P, then that's going to give me a great deal of courage to make a bet that this is all over, folks. This could still be one. If it sells off strongly on Monday, then we're probably heading down towards these lows, whereas a wave 5 here. I still think, folks, that if even we are coming down here, that there's not that much more of a sell-off. So if you're sweating out positions, we're very, very close. I think we're a week away from a weekly low, where at worst, you'll be able to get out at much, much better levels. And the most upside would be that we're now going to move back up again. A break of this low would unfortunately add to the probability that any rally here was a bear market rally. So that's the most positive thing that we should be looking for next week, would be a push up through this high. That'd be a wave 5. That would definitely indicate that we're now got a new impulsive trend up the page. It's going, for that to happen, it's going to take a few sentences from the Fed. Okay, and not that much. Those are people that keep telling me that the Fed's run out of ammunition. That's just rubbish. So that's the last 2 days of the S&P 500. We have one of our fellows from Oxford, Steve, was telling me he was trading a 5-minute chart. He says that the indicators were hard to spot. They're like ghosts on a 5-minute chart, those indicators. So that's sold off and moved up quite strongly. So basically in 2 days, it went nowhere. As I say, if you're feeling confused, well, you're in a fairly big group. As Hemingway so beautifully said, you could take glory by association. That's my one bet, which is CF. It's in Stan, it's in fertilizers. And there's a shortage of fertilizer around the world, and it's undervalued. It's got an excellent RV. It's got a bloody awful RS, and everything else is cool. I took the trade because of the pattern. There's the earnings per share rising from, it's gone up 3x in the last year because of the shortage of fertilizer. It pulled back in a flag, Made a little double bottom at the 618, and that's a sure sign that there's institutional involvement. Now, I didn't get in down there, but it then broke the flag on huge volume. You see that? See that? That's the biggest volume apart from this big up day here. And then it went sideways into what I refer to as a multiple inside pattern. And then it broke that. Now, in the inside pattern, there was no volume at all. So if you go back and look at the presentation that I did on the morning of the second day of Tampa, I talked about price and volume and very simple price and volume relationships that you can see. As I said, many people will say that there's an awful lot of trades that are booked the day after, even 2 days after, but nevertheless, it's the best we've got. It's a completely independent data stream. Now, I bought the darn thing, and I did a video on this, in fact. I bought it on a pullback to that old high at 72.50, and stop loss is under this low somewhere down there. I think still under that low. We shall see what happens. It's going to take a bit of energy to get through that top, the old high here. So that's my single position in the American market taken. On the market timing was the primary wave. I know I said I was going to wait for the DEW, sorry. Couldn't resist it with a price and volume relationship there. So that's all I've done. In the UK, well, I haven't done anything at all. We have a up-down situation. We had a couple of green lights the other day, but we gave that back in the last 2 days, folks. Again, the stochastic, my 8-week stochastic is right down, and it hasn't been down in the same place since last. And I think, folks, that there is a weekly low, just maybe this week or the next week. This is starting to turn. And again, in the UK, we can see there's very powerful levels here. So that bodes well, as I say. I'm not sure whether it's the start of a new sustained trend or whether it's a rally in the bear market. Certainly the fundamentals in the UK are drawing in, with interest rates going up through the roof and our leadership that seems to be completely out of tune. I saw the governor of the Bank of England stood up the other day and said that people shouldn't press for high wage increases. And, I can imagine the average fellow on a normal wage is going to be saying, that's nice coming from somebody who's earning £500,000 a year. So I'm totally out of touch. We had some great signals here, folks, and then we went into this tight range, and clearly some of our trading systems have got bashed up in this. Anything that's associated with a trend has got bashed up in this. Nevertheless, we had a darn good run here. I can't see any divergences down here. They're in a mega oversold situation. The MTI is up a little bit, 0.79. The buy-sell ratio better than the US, so they're going the right way from a mega oversold situation. I remain quite positive here. That's the last 2 days where we give up quite a bit, and as Stan says, pretty much out of oil, nothing much moved. And that's just a blow up of the same thing. We had some, and we got a sell signal, not quite as good as the one in the US, and that sell signal came out in the middle of January. And I keep telling people that these confirmed calls have to be taken very seriously. That's the DEW, and as I say, if the darn thing would close above this high, I would be much happier. This can move very quickly, this DPO. So for a buy signal on the DEW, this needs to break above its center line, which is 0, and it needs to close above the moving average. I would be happier if it closed above that high. I really would. And, this will take its lead from the S&P. I would expect it to open up a little bit on Monday morning, but to actually catch that run up in the S&P that we had on Friday night, all things being equal. I have 4 positions left, and I'm 70% in cash. And there hasn't been the last it hasn't been great. As I say, I got a bit bashed up in that sideways market. There's nothing you can do there. Gold, well, gold has done nothing. I'm still very positive about this chart. The weekly chart looks absolutely great, but unfortunately, the daily chart not looking nearly as well. I was short from here, just from there. We've 1, 2, 3, 5 down, 3 up, and it fell like a stone there. So that those people that follow waves, and that's a lot of people at the institutional level. This fell like a stone. Now it's found support at my rather crudely drawn trend line here. Sooner or later, it's going to break up. My advice to everyone is to wait until it clears this top line, unless you are a short-term trader. But the ranges here are getting smaller and smaller. It's going to make a decision one way or another. The weekly chart looks incredibly bullish. However, this daily chart, in fact, has got a bearish tinge to it. So I have one gold stock. I got stopped out of my sweetheart polymetal. I have one gold stock, Pan-African Resources. Platinum looks solid, but my platinum stock still hanging in there, but it's pulled back a little bit in the last week. Still looks fine to me. Copper has been stuck in this pattern up here for quite a while. Very, very difficult to tell from the volume numbers as to whether that's accumulation or distribution. But this BlackRock World Mining, which is an investment trust invested in all the big mining companies, all the usual suspects, it charted an inside week last week, and I'm going to take a bit of energy to get through the top, and that, folks, is my biggest position. It's in a trust that I maintain for my 2 boys. That's my single biggest position, and the other position is Shell, and the rest are South African stocks that I accumulated over the last 40 years. So I'm still happy with that. I'm still holding that. It's just going to take a bit of energy to get through that top. Italian Mining, I'm not holding, but this cup and handle pattern is not a particularly pretty cup and handle pattern, but the £4 level looks quite solid these days. And there's oil, folks, and oil's had a cracking week. It can easily make this 1.618 target in this. That's a weekly chart. I think maybe I didn't update that. There's the you know, I've stuffed this up a little bit, folks. That's the Friday chart. That should not be there. That's from an old presentation. There's where we are. And unfortunately, I can see 1, 2, 3, 4, and now we're moving up towards 5. Will it get up there? Can do easily. But there's a 127 level in there, 127 of this that will be important. And the high of Friday was exactly at that 127 of this. 127 is the square root of 1.618. It's, whether you believe it or not, there's lots of people looking at it. But this is starting to get extended up here, folks. So those of you that are we can't easily get a run to 99s. At 91, only take a couple of days if it's got energy. But it's starting to get very crowded up there. So just remember, when it's time to sell, you won't want to. And that's my second biggest position, which is Shell. And it's going very nicely indeed. And that position was taken right down in this dying embers. It's a very conservative position. They're rolling in cash. BP's numbers are coming out on Tuesday, ladies and gentlemen, so that will affect the share, that's for sure. But everybody, including my mates in the city, believe that they're going to be bumper results. And those of you in the UK will have read that there are major big players saying that there should be a special tax on oil companies think that's rubbish. They had to come through this. Nobody was asking for a tax here. So many people. We've got one gentleman called Paul Molina in our group who's up to his eyeballs in old stocks, and he's had such a wonderful time. But he was incredibly brave during this part. So well done, sir. That's my little presentation. I probably rattled on far too long. That's what I think we should look for in terms of strategy next week. I'm starting to become reasonably positive of another leg up. As I say, if we do get an advance on the S&P Monday and Tuesday, which takes out the high of the last day or two, that would be incredibly positive indeed. If that doesn't happen, then we could easily move back and make a new low or make a double bottom. Whatever happens, there is a weekly low that should last, even under the most bearish circumstances, for 3 to 5 weeks as the market, even under the most bearish circumstances, the drift should be up, sideways to up for 3 to 5 weeks, quite soon.
All right. Well, thank you so much, David. You've given a wonderful overview, and I think guidance to individuals is pretty clear. It's a little bit of caution, use good risk management, and wait for that breakout to continue. We're at those levels where there's a bit of resistance. So in North America and UK, just be a little bit cautious and use good defensive skills right now, I think, is the order of the day. All right. Well, David, thank you so much. We always appreciate your insights and commentary, and it's pretty great. People are commenting in the chat. If you like all the presentations, all 2 of them so far, make sure you click the like button, and we'd appreciate it. So, David, thank you so much again.
Cheers. Good day, everyone.
And right now, I'm going to bring in Don Rietsma from Kelowna here in Canada, and for his Taming TQQQ. I know there's a lot of interest in the TQQ, and Don is retired in the oil and gas technology development and data analysis areas, so that's a pretty fantastic background for investing and developing trading systems, as you will soon discover in the presentation coming up. So I'm just going to click on Don here and make him the presenter. Don, you're with me and you can hear me okay, and your screen is okay. I'm going to make you the presenter, and you can bring over, there's your screen. So if you pull up your slides, and there it is, you're all set, Don. Thank you so much.
Okay, thanks very much, Stan. Real pleasure to be here today. And I'll get right into the presentation. This is my home in Kelowna, Canada. That's not what it looks like today. We're snow-covered hills, but you know, we have lots of lakes, wineries, golf courses, and just wonderful places to go here. But I'm always the designated driver. And we have great lakes. Like I said, I love fishing with my brother and golfing with my youngest daughter because I always get that free lesson. And I got 2 kids at UBC, and that's over here. And they're studying kinesiology and medicine. No, they're not engineers like me. So my older 3 kids are in Alberta, and one lives very close to Stan, actually. But I'm retired, as Stan said. Worked all over the world, mainly technology and data analytics, and a big part because of all our booms and busts was having to reinvent myself in the business several times. I'm always looking for a better way to do things, just my nature. And here's my story about the markets. And what I take away from this picture is that they really can be stormy, as we see, and we need to be prepared. So I believe I can earn far more by giving than by taking. So with that, I'm just going to get into my presentation, and hopefully you get something out of it. So it's taming TQQQ. As if I try saying TQQQQ all the time, I'll get too many Q's in there. So just my objectives, the questions that I had leading into this, how can I get things better, for example, and then the methodology, graphing that 2-day, 2 end-of-day moving averages, which is maybe not unique. We see lots of those 3s and 8s and 5s and 13s and what have you. The power tools, and what's a presentation without tools? Unisearch and Backtester. The results, what I conclude out of this. And then there's just a ton of bonus slides that I can't get into this presentation because it's not long enough. You don't have a day and neither do I. So lots of extra slides when you do the download. So here were my objectives. I wanted an acceptable risk to reward ratio, or reward to risk, depending on how you want to look at it. But I used a compounded annual rate of return over the maximum drawdown. So do I get a good return and minimize my drawdown? And that's pretty easy to see when you do back tests or your portfolios, that sort of thing. So it's really just CROR over MDD. And I wanted that to be greater than or equal to 1.5. I also wanted to see if I could outperform or do it as well as the bull strategy, the O buy and hold, or just TQQQ buy and hold. And what's O? Well, that's the Oracle of Omaha himself, Warren Buffett. So I'll show you a couple of equity curves of that. Also wanted to preserve capital. That's all part of that maximum drawdown. And mainly during recessions when you can take a huge hit. Also whipsaws, what's happening there. I wanted to be able to graph it really easily. And then confirm it with Unisearch and Backtester. And then put it into Portfolio and RoboTrader to manage the transactions. So what questions? What is TQQQ? Well, it's triple leveraged, it gaps up and down, it's volatile. If you've been watching it lately, it's had like 15 to 20% intraday price moves. It's a pretty crazy stock, or ETF, I should say. So bull strategy, Bob Turnbull presents on that several times over the years. I think it's great. It's very easy to use on using a weekly or end of week graph, where the EMA for 2 weeks is greater than the EMA over for 5 weeks. And you just buy at the open following week and sell intraday with a 10% intraday trailing stop. And I'll just point out for 2022, it's a 15% intraday trailing stop. So could I find 2 moving averages like BS? And what's the optimal way to buy and sell? And then how do I manage the system? So what did I do? Are there 2 end of day moving averages like BS? Well, the easiest way to look at that was just get out a graph and start graphing it and see where these crosses happen. Test different parameters in the Unisearch and Backtester, and that's a laborious task. It just takes time. And what's the best way to manage the system? Paper traded in Portfolio, or go live in RoboTrader, or maybe just manual? Depends on what you have. So just graphing the 2 end of day moving averages, compared it to BS during recessions. And the constraint was that because I want to use Unisearch and Backtester, I'm limited on the number of and types of moving averages that I can use. So that's what you see when you're going to set up moving averages in Unisearch. And whether I should look at a weekly or end of week graph, because I'm just going to look at the EMAs, I'm not going to look at the bars. So a weekly graph shows you the start of the week. And the end of week graph obviously shows you the end of the week. What they both show you is the closing price and the EMA values based on those closing prices. So when you graph it on the weekly, you see weekly Monday date with the Friday close and the EMA. And for my head, that's just too confusing. So using the end of week graph, it just gives me the date plus those values. So in this presentation, I'm going to use the end of week graph. There's no right or wrong to it, just my preference. So getting to graphing during the recession, here's 2018. And like I said, what I want to do is just see where I get across below the 2 crossing below the 5. And as you can see here, I've got green dots for the 2 and red dots for the 5. And this is an area chart. So I find it quite easy because I can see green up here and then pink or red down here. So we go down through the recession and finally get across here on 11th of January. So that's great. Now I'm going to go to my end of day chart and see if I can find something that looks like that. And what I found actually is there are lots, but just working on it, I found that the 12-day weighted moving average less than the 26-day weighted moving average worked pretty well for finding a similar date where the 12 crossed below the 26, and then another similar date where the 12 crossed back above the 26 for 94 days. So if I put those together on a bar chart so you can see it, or our candlestick chart, I'm sorry, we see that it's the 5th of October and the 8th of October. Well, that's pretty close. I was happy with that. And the same with looking where the crosses came back above, and 94 days versus 98 days. So that was very impressive as well. So what happened when I looked at the recession in 2020? Now it was a lot shorter and a lot more abrupt. So as you can see, there was a big drop here from the 2 below the 5, but it crossed on February 28th, then crossed above on the 17th of April, so 49 days. When I looked at the 12 crossing below the 26, it was on the 26th of February. And then when it crossed above, it was on the 8th of April, so 42 days. Again, putting them together on the same graph, I see that the 12 and 26 was a little bit sooner, but not too bad. And about a week sooner when I graphed it. And I was a bit surprised by that, but maybe not really. The 12 and the 26 just moves a little faster than the 2 and the 5 EMA on the weekly. Again, it's not wrong or right. It's just how it ends up when I look at it on a recessions. How it behaves through other periods has to be investigated as well, and that's where the Unisearch and the backtester comes in. Because although it looks good on the recessions, I still may not get really great results when I test it over a longer period of time. So here are a load of parameters, and this is by no means a complete list of the things you can do with the Unisearch and the backtester to see how well your theories work. But my advice is just keep it as simple as possible, and you have to do it in a methodical fashion. So I'll just jump to the chase and tell you what my optimal solution was. And it's based on rules, which is buying at the current day close when the 12-day weighted moving average has been above the 26-day weighted moving average for 3 days. And this was really the Goldilocks zone because I tried other days and this one just happened to work the best. 2 was sell at the current day's close using a 10% intraday trailing stop. And I'll show you another stop I tried. And then 3 was to buy at the current day's close after 3 calendar days if rule number 1 is still true. And I'll put that in a picture because I see pictures a lot better than words. Again, another Goldilocks zone. But why the buy sell at the current day's close? Well, really, it worked better than the next day's open. And these are the only options available to you in the backtester. So I can't sell immediately on a 10% intraday trailing stop in a back test. So there's the picture. Rule 1, buy. Rule 2, sell. Rule 3 needs rule 1 again, and then buy. And if you set this up in RoboTrader or Portfolio with Genius, it does all this for you. Of course, these parts in RoboTrader are semi-automatic. You still have to execute the trade, but it'll tell you that. So here's rule 1, and that's when Unisearch starts finding TQQQ. There, and there. Why? Because the 3 green dots are above the red dots. So that's pretty easy to see on a chart. If you just wanted to use a chart, it'd work great. But there in the Unisearch, you can see that it found this to be true by finding TQQQ when it executed this search. The day before, it didn't find anything. Why? Because it was only 2 dots, not 3 dots, and it's looking for 3 days. Here's where we sell on rule number 2. So why intraday? Well, it produced better results. This all just means if I don't check this box, it's going to use the close of the day. So here's a trade starting on December 30th at 84.74. I get a high on the 4th of January of 85.95. So times 0.9 gives me 77.36 for a 10% trailing stop. So as long as price stays above that 77.36, I'm not going to get stopped out. Well, as you can see, got stopped out on the 5th as a low hit 74.50. So that automatically triggered this 10% trailing stop because it was less than 77.36. And then the rule is to sell at the close, which was 74.68. Pretty straightforward. You can do that with a graph too. And in the bonus slides, I show you how you can actually track that. Now, getting to another stop. Here's a 15% versus 10% trailing stop going all the way back to inception of the TQQQ in March 2010. And what this shows you is that for the first 5 years or so, 6 years, neither of these strategies were very stellar in terms of meeting my requirement of 1.5 for compounded rate of return over maximum drawdown. As you can see, the 15% trailing stop did very close in 2013, a little lower, but did well in 2015. The 10% trailing stop for the first 6 years did really poorly. But then it took off in 2016 and then dropped in 2021. So this shows that it outperforms the 15% trailing stop from 2016 to 2021. Now you can backtest over the full 10 years and you'll get better results in terms of return using the 15% trailing stop. Why? Because you did better here, obviously. right? It outperformed the 10% trailing stop. So you made more money. But this is what happened. This is what it looks like when you look at all years, first 6 years, and the last 6 years. So overall, the 10% trailing stop outperformed the 15% trailing stop. Why? Because this gain in this period was much higher compared to the gain between these two. So there's a lot of gap here, not much gap there. So you can just go through this yourself. All this does is really look at over 6-year time periods or 3-year time periods, just to give you an example of performance. But the point being, you're here. You're not back in 2010. So running a back test, saying if I bought in 2010, yeah, it can look really great. But the point is, what are you going to do? Which horse would you bet on? Knowing that this is now performing better than that. You have to make up your mind about that. You know, look at the averages. But the point being, you can't just take one back test, look at that singular number, say, that's a great back test. You really need to break it down quite often into multiple time frames to see where it's producing. I can tell you, I've got tests that did really well last year. They're doing terribly now, you know, particularly something like Angel's Wings. So you got to pay attention. So here's rule number 3. Buy at the current day's close. When after 3 calendar days, rule number 1 is still true. So here's the 3 calendar days in the automation rules. I made the mistake of thinking it was 3 trading days, but it's not. It's 3 calendar days. So what happens? Okay, we get a close on the 23rd of November. So we sell here. And then we have Thanksgiving Day, which doesn't show up on the chart because we only show trading days on the chart. And then you buy again on the 26th of November. Why? Because the 3 calendar days are met, 1, 2, 3. So you're buying at the end of the 3rd calendar day, when rule number 1 was you got 3 dots above 3 red dots. So all through here, rule number 1 was true. So rule number 1's true. Rule number 3 is true. So the results. Okay. Now I'm putting candles onto moving averages. So try not to think too much about that. But there were 5 trades during this whipsaw period. One here, another one there, and there's that one, 3rd one. That's always a bit hard to see. There's 4, and then 5. We finally got stopped out on this big gap down on that candle. And that's following all the rules. Well, that doesn't look very good. But point being, you made all those trades, you'd still be up 10.46%. Now, I'll put that this 10.46 is not the sum of this. It's how much you made compared to how much you had before this buy. So from down here on the left, up here, through this whipsaw, would have made 10.46%. Back to the recession. How'd that do? As you recall, we had to cross up here. But here was a buy and then a sell on this big candle. Then, because none of the rules were met until here, finally got back in. What happened? Well, it ended up being a 6 point or a little over 6% gain. because it kept me out of all this downside. Still came out with money and ready to get back in again. Now, the big thing is it saved that 54% drawdown had I been holding. And I don't know too many people that can stomach something like that. That's not what I want. And here's the 2020 recession. Again, a buy, a sell on this candle. And I find it kind of interesting that quite often I'll see support levels at the 26-day weighted moving average and the 12-day for moves up. Maybe more work to be done there, but I got to have a feeling that somebody else is looking at these weighted moving averages as well. So unfortunately, there was another buy here. Why? Because we sold on that day and it was 3 days and we still had 3 dots above the red dots. So we went and bought. Now, if you're a prudent investor or kind of a wily investor, trader, you may not buy in on this candle after that gap. You're going to wait and see. So just using your own knowledge of the markets and this as a guide might help you to make even better trades. And there we go. Buy here, we had a pullback. And again, you may not have sold because it was a pullback to this level. But in any case, just doing what the backtester does ended up with a 2.46% gain. And off we went again, trading. Again, the big win in my book was it saved you a 63% drawdown from that sell to the bottom. So you're going to look like a hero selling here. Then to more recent times, the whipsaw in 2021, 2022, 3 trades. Got in October, coming off the bottom. Stopped out here because this big high and then the low, and then the next day just knocked us out on this intraday. Got back in again because the rules were still true. Got stopped out again, but who knows? Maybe it was going to reverse and move higher. Didn't know what the market was going to do, so stick with the rules. And then number 3, back in again. Maybe the market's going to go higher. Nope, stopped out on these big candles. Okay, so this one's a loser, but 1.12% to be precise. But really, the big win is that you're not suffering a 35% drawdown when we hit this big low on the intraday. So the whole point is, this is making the rules work for me by limiting my downside during whipsaws. And that was one of my objectives. Now, just some numbers and graphs, because I like numbers and graphs. Just to compare to the BS strategy, by the way, because it buys Monday at the open. I just wanted to show you, where the rules take you as far as buy days go. So rule number 1, when it just buys, there's not many, there's 4 on a Monday. And then rule number 3, which is a combination of rule 1 and rule 3, or that 3 calendar days in rule 1, gets you a lot of buys on the Monday. So overall, the majority of buys are going to be on the Monday. And a few here and there, 10 on Friday, that sort of thing. So it's very similar in a lot of respects to BS. And just to show you the sells, it was really fairly well distributed throughout. Ended up being more on a Thursday than on a Friday. Maybe people were trying to knock the markets down, who knows? Okay, so what did this mean in terms of dollars? Well, here's the equity curve from the start of 2016. So again, comparing it with BS that started on the start of 2016 as well. yeah, big gain of 1,600%, 63% winners, which is pretty amazing. And then a compounded rate of return of about 60% with a max drawdown of about 20%. Very similar number of transactions. So all in all, doing pretty well with an average win of 13.6% and average loss of about 5%. That's pretty amazing, almost 3 to 1. But then in 2021, till the 28th of January, not so good. We all know that last year has been pretty hard on tech, but still made money. And looking at it, the compounded rate of return is still around 50%, and the max drawdown is held in at 20%. And to me, that's important because that shows a consistency in the trading system. And 16 trades versus 20 with bull strategy. Again, 13% average win and a little more than 5% average loss. Still very decent, but down from the average of over 2016. So if I put it all in a table and match everybody up, like I said, I want to see how well I do against BS and triple O and buy and hold. Well, here I am up at the top with the 10% trailing stop. 15 and 20 did quite well. And then surprisingly, the 20% BS gave me a better score than the other two. And these are in green because they're 1.5 or above, and yellow because they're above 1, still fairly decent. But then looking at these other benchmarks, they did quite poorly. So, you know, really what happened, Warren? That's what I want to know. You're supposed to be the oracle. And then in January 2021 to January 28th, 2022, again, not quite so good, but you know what? The oracle did really well, so I'm going to have to eat my words on that. But, you know, I'm really happy that the TQQQ 10% trailing stop did well. The benchmark buy and hold did quite poorly, and so did the BS. And I'll just show you that on the equity curves. But this is just what happens in maybe 1 year, but over 5 years, it can be better. Or another year, you know, these can change places. Just have to look at, you know, what happens over different years and timeframes to pick what works for you. So here's looking at the equity curves. And, you know, here's 2018, we get the flat spot with BS, you get that flat spot, saves you the drawdown, saves you the drawdown here in the 2020 recession. And then just in August, September 2020, when we had the big run up and pullback, BS really took off, but for some reason got caught because maybe it's going a little bit slower and there was a quick pullback. So you see this big drop, and the 12 and 26 weighted moving average just held the gains. So you see the difference in slope to the equity curves as a result of that. Still, you know, you get these quick pullbacks, and the BS 2 and 5 weekly EMA doesn't quite catch as quickly as the 12 and the 26. So there's looking at buy and hold though. Again, you know, here's 2018, you get the drawdown as a result, as I showed you earlier. And here's the 70% drawdown buy and hold versus getting out. And then recently, here we are way down here with buy and hold, sorry. And out here, well, let the markets do what the markets are going to do. We'll get back in later. Here's the Oracle of Omaha. The equity curve doesn't look that great. You know, it's flat, choppy, gets the big drawdown in 2020 to the tune of about 30%. But here, when tech was dropping, so the TQQQ dropped and there was a loss, Berkshire Hathaway B has actually gone up. So it looks to me like that's a flight to safety, or the stocks within Berkshire Hathaway B, which are probably all value, I don't know, I haven't looked at it, are doing well. Looking at a 15% trailing stop with BS, which is being used now, hasn't fared very well. Again, because it's not catching these downs quite as quickly as the 12 weighted moving average and the 26-day weighted moving average. Same thing here, 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 and here. It's just how the markets are going because they're much more volatile. And for buy and hold, the TQQQ, not bad there, about the same, about the same here, and a little better there. Now, if I just back up for a second, this is just risk mitigation. We can always look back and say, oh, I shouldn't have sold. The market only dropped to here. Well, you don't know that. What's the right side of the curve looking like? We don't know. It's maybe looking like that. This is why when I set up rules, I follow them. Sometimes the rule is right, sometimes the rule is wrong. Overall, it's a 63% win using this system. Here's the Oracle, he just buys and holds, smart guy. Because here, the market went up, or his stock went up. Here, his stock went up, pulled back though. Stayed flat there, but while tech is losing, he's gaining. So this year he's done well. Over the years since 2016, not as well as this system. So in summary and concluding, they're the rules compared to the bull strategy. Very similar in a lot of respects. And you could do it with a graph or RoboTrader or portfolio. So did I get an acceptable risk to reward ratio? Well, it was above that 1.5, and it was better than most of these strategies, except Oracle of Omaha's in 2021. So I give it a check. I like that. Did it preserve capital during the recessions and during the whipsaws? Yes, it did. Was it easy to follow on a graph? Well, I think it was when I put it on an area graph and look at it that way. And I went through a lot of back tests and confirming the efficacy. This was the best one I could find. Not to say that there aren't others. I'm sure there are, but this gives you a starting point. And portfolio and RoboTrader to manage transactions, because I've got it running in Unisearch, and you know, I can just convert that back test to portfolio. RoboTrader, I have to set it up manually, but once it's going, it's on its way. So actually, I do paper trade in portfolio, and I use RoboTrader as my real-time account. And the reason it's paper traded in portfolio is because it will sell exactly at the close. Maybe what you've noticed is selling at the close might not be possible. You have to actually sell just before the close. So RoboTrader tells me, you know, hey, the 12's above 26, the 3 calendar days has been met, buy. Well, I set up my time to buy anytime within the last 2 hours before the close. That's not exactly according to the back tester. I can get pretty close to the close if I want. It's really just up to me. So the rest of that is in the bonus slides. And I think I'm just about out of time. So you be the judge from here. And then when you get the bonus slides and have a chance to go through them, we can have a further discussion on the Facebook user group. So is it a holy grail? I don't think so. Volatility and risk tolerance has a lot to do with it. Try longer moving averages for less volatile instruments like the TQQQ, for example. It might work better. And learn to tame others using this approach, capital preservation during the downtrends, so the recessions, during whipsaws, and then back test to see what works and why, and don't rely on just one test over one period of time. Try it over several time frames, and different moving averages, weighting different times. Like I said, there are a lot of different parameters. And then paper trade and portfolio, or go live in RoboTrader, and that's what I'm doing. So don't forget, there's all the bonus slides. There's a lot of them there. We don't have time to go through them. So I just thank you for your attention, and I hope you have a great trading journey. And I'll just hand it back to you, Stan.
All right. Well, thank you, Don. That was fantastic. I'm seeing a lot of great comments in the chat box, folks. If you love this presentation, just type a 7 in the chat box, and if you didn't, you can type something less than a 7. But just let us know, what do you think about that, or just click the like button in YouTube. But a lot of great comments coming in, Don, and people are quite. I think your explanation was quite clear. So I think you're typing in a lot of 7s that they really got a lot of great information out of it. Really like the fact you can back test the strategy. Really like the graph layout. And by the way, Don's bonus slides shows very clearly the setup for the graph layout, and he's going there right now, I think. And it's a very easy setup. You can just see over at the right, just setting up that weighted moving average, and you can there is how he did his case studies. He just moved the moving averages up and down one at a time, and came up with the very best setup. And of course, in order to change your moving average from a simple to a weighted, he's showing you how to do the style right now. You can just click on a style, change it to triangles or dots, and there you've got some differences there. But you just right click in the price column, and that gives you the choice of either simple moving average, the exponential, or the weighted. And then you've got them on your graph panel, and you can use the arrows. So, and your back test settings are right in there. So I think you'll be able to set up the back test quite nicely. Now you will have to have the ProTrader to set up the search to run the back test. The ProTrader is that add-on module for technical studies. You don't need ProTrader for the graph layout. So I think he's given you a very simple, or I'm just reading Erwin's comments here, very well thought out strategy, improving on an already good strategy. And all credit to Bob Turnbull for putting us on the right path, and still a very good strategy for the weekly trader, and Don's strategy, obviously great results, and an easy setup as well, and the ability to get those alerts from the back tester or the robo trader or the portfolio manager is a pretty big plus. All right. Well, Don, thank you so much again. Pretty fantastic. And you've got a beautiful setting there over the golf course in Kelowna. maybe no golfing today.
No golf.
But a pretty nice trails. I know we love going to Kelowna. It's one of our favorite places. Gallagher Mountain. We've been there many times and just love it. So thank you for taking the time to put together an excellent presentation.
You're welcome, Stan.
Yeah, and interesting comment from Mel Morrow out of Calgary. He says, excellent, Don. As you point out, no system works all the time. setting and following the rules is what makes it paramount. And yeah, I mean, I think Don was very, very clear that capital preservation was one of the motivations here of setting up this very systematic system with firm rules, and I think that's pretty good.
Was that Mel Morrow from my old days in Judy Creek?
Oh,
I'm just wondering.
I don't know. Mel's still on, so
I-
he can chat in if
Mel and I
it's the same
for
one.
many years before I became an
Oh, that's pretty fantastic. Well, listen, we've covered a lot of ground, everyone, and I want to thank Dawn. I want to thank Dr. Paul again for excellent presentations. Oh, and Dawn, Mel says, yes, it is. So you've made another connection. That's pretty fantastic. All right. John is asking, where do I find the bonus slides? So, Don, what I mentioned, or John, what I mentioned at the beginning of the presentation is all the slides will go to VectorVest Monday morning, and they upload them into a link that they will send out to everyone on the webinar. If you're not, for some reason, if you're not a VectorVest subscriber and you want to get these slides, you will have to email me, and I've got that coming up here. I'm going to take back the screen here for just a minute, if I can. So thank you again, Dawn. Show my screen. Bring it down here. And from the current slide. So if you email me at stan.heller at vectorvest.ca, if you're not a subscriber, you'll need to email me to get the slides. If you are a subscriber, VectorVest will be sending them out to you directly, and particularly if you have registered for these forums, you'll get that. Richard, the software that Don used is VectorVest. It's the VectorVest software. It might look a little different because of that graph layout. I agree with you. Very innovative layout with the area for the weighted moving averages. And with the weighted moving averages, it looks a little bit different, but it is the VectorVest software. All right, listen, I want to thank everyone so much. For those of you that are just learning about VectorVest right now, there is a special on. They've continued the New Year's sale, so for a limited time at least anyway, you can get a 30-day trial for just 99 cents, US cents, I guess, US dollars, and you'll get access to all 5 databases in the VectorVest software. Just go to vectorvest.ca or vectorvest.com and click on the free trial button right at the top here, and you can get yourself all set up. Marguerite and everyone, thank you so much for your comments. The likes have gone up quite significantly, and we appreciate that. So thanks, everyone. Have a great rest of your weekend, and keep an eye out for the slides on Monday. As far as a replay of the presentation, just go back to VectorVest YouTube channel. Let's see if I go back here. It's just International VectorVest User Group Forum, February 2022. Got it right there at least, and you can watch the replay. So thanks, everyone. Have a great rest of your day, and special thanks again to Dawn and David for excellent presentations again today. Thank you so much, everyone. All the best.